Hello, everyone, and welcome to another edition of the Forex Technical Market Update for the 17th of June 2015. Okay, this morning the British pound has been on a tear against most of the majors, and this has been the theme over the last week or so, is playing British pound strength. Our method of trading is essentially swing trading slash position trading. And at this moment in time, the British pound is showing incredible strength against other currency pairs. So as a trader, it's definitely worthwhile for us to take advantage of this pound move. Now, for those of you who have been following this particular trade in our portfolio since we started back in April or early May, actually, we entered this trade, and now it's definitely coming to fruition, and our profit so far in this is over 1,000 pips in this particular currency pair. And when we're swing trading and position trading, when the market is trending like this, all we need to do is just sit back and let the market do what it needs to do. We don't need to enter more positions. We don't need to be in and out of the markets. So we have a good trade going, and we are just going to watch it and see how far up this particular currency pair goes. Taking a look at the British pound versus US dollar, we're pulling back slightly this morning here. The market has pulled back slightly off of the high that was made, and 157.56 was the high, and we're currently at 156.95. But we're up on the day, nevertheless. So far, market is up on the day, and the British pound, US dollar, the key area of resistance is this high up at this 158 level. This will definitely be the area that will determine whether this market will come up, put in a double top and collapse back down, or will play out this head and shoulders pattern that is occurring in the market with their left shoulder, head, right shoulder, and we'll see if the market continues to go up. Personally, in our managed portfolio here, we are long the British pound versus the US dollar, and I'm looking, our initial target is this 158 level, and I'm looking to see how the market will react around this 158 level. And if we surpass this 158 level, our next area of resistance will be up by the 160 or 162. So we have a good trade. Again, we have a good trade going here in this currency pair, and we're just going to wait and watch and see how far it goes, because that's the beauty of about swing trading and position trading. There's no need to be staring at the screen all day. There's no need to be constantly monitoring the positions. You enter the market, you set it, and you just monitor what's going on from time to time. Taking a look at the euro versus the USD, it's kind of not doing anything much. I mean, I've drawn the most recent trend lines, and we see that the market is in just a consolidation pattern. And over the last couple of, or since June has really started, the market has done nothing of note. As you can see here on the 4-hour chart, we're just playing ranges here. I mean, market is just wobbling between 114 and this 111 area. Nothing is really happening. And for clues as to the euro, it has to surpass 115 for the upside, for the bulls to gain momentum, and it will have to break down below this particular low of 108 for the bears to gain some momentum. Another market that's down huge on the day is Australian dollar versus the US dollar. The market looks like it wanted to recover, but is currently heading back down, and it will be interesting to see if we challenge these lows and eventually break down below these lows. Uh, that will be interesting to see with the Australian dollar. But the Australian dollar has been fairly weak this morning. Another weak currency has been the New Zealand dollar versus the US dollar. As you can see, this is in a pretty strong, pretty significant downtrend here. The New Zealand versus US dollar, pretty significant downtrend. These lows at the 72 level was taken out near the end of May, and the market is still heading to the downside. How you can play New Zealand weakness is if you find that New Zealand is weak, then and the British pound is strong, then clearly the British pound versus the New Zealand dollar should be strong, and that's exactly what has been happening. And I forecasted this move here. I mean, I said that we could be looking at a reverse head and shoulders on the weekly charts and even the monthly chart for this currency pair. With, as you can see, shoulder, head, shoulder. The market is breaking out or has broken out of the neckline and is rallying fairly considerably. Now, in our portfolio, we're already long the British pound, so we don't want to overload the portfolio with just British pound alone. But this was definitely a trade we spoke about earlier in May, and continues to the market continues to rally. And that's the thing with trading the markets. I mean, it's good to look at these markets, but are you involved? Are you participating? And if you are not participating, why aren't you in these trades? What's preventing you from being a part of these trades? Because the markets are definitely offering some excellent trading opportunities as of this moment. And that's why it's good to also look on currency crosses, because as you can see, nothing much is happening in the euro versus the US dollar. I mean, the market is almost stagnant. But the British pound versus the Australian dollar, which is a market we also spoke about, that's rallying. British pound versus the Japanese yen rallying significantly. The British pound itself rallying. The US dollar versus New Zealand dollar in a very nice downtrend. So these markets are moving, and it's just for you to participate, because when you're trading the markets, it can be very disheartening to see profits being made, markets moving, and you are not a part of it. I know the feeling all too well. That's why it's good to follow a system that is designed to capture these moves. Okay, taking a look at gold, we're now at this channel bottom, and we're challenging the 1175 area again. This market just can't seem to make up its mind where it's going, and a breakout of these levels, as you can see on the chart, a breakout of these levels will give us clues as to where the market will head next. Looking at another currency cross before I go, it's euro versus the Canadian dollar. We see that the market is currently at our Fibonacci retracement level 618. It went up to as high as 786 and is coming down nicely. And if this comes down more, this may be a good opportunity to short this market. Remember, to make money in the market, you have to enter the markets before the markets actually start moving. So that's why we analyze the market and look at these setups to see, okay, where is the next trade like this? British pound, Japanese yen. When we entered this market, it certainly did not look like this. It looked something like this. And we gave some analysis to say, okay, this market has a potential to move, and it has moved up considerably. with the British pound, Australian dollar, we didn't enter the market when the market looked like this. It looked like something like this. We were in a triangular consolidation pattern. We spoke about the triangle at great length. The market broke out of the triangle, tested the breakout point, and has just rallied ever since. So, in order to make money, it may seem obvious in the market is to get in before these moves actually do occur. And a a setup I'm seeing here could be a short of the euro Canadian dollar. It this could definitely move to the downside if we see further weakness, and and this is definitely something I will be keeping my eye on in the next couple of weeks. Okay, thank you very much for listening. Remember, if you want to trade these signals and have them copied into your account, click on the link below, because the best time to get started is now. Now is always the best time to get started, because what you find is that as the longer you stay with the program, is the more profitable, and the trades will start to accumulate and accumulate and accumulate, and you get that snowball effect. But it doesn't make sense. You sit back and wait and wait and wait, and you see these trades being done, uh, and do nothing, because the copier service is really a simple way to make money in the markets. All you do is you click on the link below, sign up for the service, sign up for the copier, and just sit back, and the trades will be automatically taken in your trading account, and risk management and everything will be automatically taken care for you. Okay, I hope you have a wonderful day, and this is Beyond signing out until tomorrow. Thanks.